Hello, guys. Welcome to this episode on Big George Trades. This episode, we'll be talking about the different styles of trading. That is from the position to the swing to the day trading. This topic is super important because the style of trading you choose to go with must align with your natural life, like your availability to trade with that kind of style, because you shouldn't pick a trading style which you won't be available to trade. That will mess up with your psychology. So let's go on with it. So the first style and one of the most common trading style is the swing trading. So what swing traders do is they try and capture the swing moves in the market. You see, the market moves in buying and selling, but in this condition, one side is stronger than the other. Like, let's say one side is stronger and the other is weak, but the market kind of change style or change condition in a short period of time, but the market always continue in the most dominant trend. So with this chart I'm showing, the market is in an uptrend. So the buyers are having a lot of momentum. There's a lot of liquidity in the buy side. So with this kind of trade, you are trying to capture the most dominant trades, that is the buys, but you capitalize on the sells as well. So you capture the buys and the sells. That is what the swing traders do. So the swing trading can be done on both higher and lower time frames. That is, for we, the higher time frame is 4 hours to the daily, the weeks, and the monthly upwards. That is the higher time frames. And we talk of the lower time frame is the 1 hour, 30 minutes, 40 minutes, and below. That is the 1 hour we talk about. So the what swing traders do is they try and capture the swing moves that I've talked about. They capture the buys. They move with the dominant trend, that is the buys, but they capitalize on the sells as well because the market tends to change direction for a period of time. That is a short period of time. Then it will continue in the right direction. So the buyers are strong, but it doesn't mean that the sellers aren't in the market. So the market goes up this way, and the sellers try to bring the market down, but the buyers having a lot of momentum will push the price upwards. So that is how the swing traders try and capitalize on the swing positions. So swing traders can hold position from days to week. That is excuse me. That is depending on the time frame you are trading on. So if you're trading on the high time frame, you could be holding trades for days, that is from days to week and from weeks to months. And when you're trading on the lower time frame, let's say the 1 hour and below, you could be holding trades from 1 hour to the 2 hour and to the daily time. Let's say that is for the swing trading. So the next form of trading is the day or intraday trading. So day trading always trade on the lower time frame, that is from 1 hour below, 1 hour, 45 minutes, 30, 15, 5 minutes to the 1 minute chart. So with the day trading, you try and capture as much move as you can with the dominant trend. So let's say the market is buying off, you try and capture as much buy trades as you can. And with the day trading, you hold position from minutes to hours. That is, you don't hold position overnight. That is, I if something is to happen during while you sleep, you won't be affected because all your positions are closed after the day because you don't hold trade overnight. But one of the disadvantage is the markets can really go in your favor as you sleep. It can go against you. That is another scenario. But what we talk about is always the positive side. So the market can really go in favor while you sleep. Then you'll be out of the trade. That is to be a missing profit. That is a be a missing capital in your favor. But if this style of trading aligns with your style, that is align with your psychology and wouldn't mess with your mindset, then you go with the day trading. That is you hold trades from 1 minute. That is hold trade from the minutes to the hours, not overnight. But if you wish to hold trades overnight and make profit while you sleep, then you go for the swing trading. So the day trading, you close trades, all your trades at the end of the day or at the end of a session. Let's say from 1 minute from the landing, you trade only on the landing session, so you close trade while the landing session closes, or the New York section. So that is for the day trading. The next style of trading is what we call the position traders. This style of trading requires you to trade only on the higher time frames. That is, you'll be capturing the major moves. That is the on the larger time frame. That's say the daily to the weekly to the monthly and the yearly charts. These people are like, hey, if the market is selling, I want to be riding it all the way from the top to the down. And if it's buying, I'll be catching it from down to the top. You don't care about these intraday swings and these swings highs and lows. No, they care about capturing the larger trends in the market. So this is the less common trading style, but it's really nice if you have a lot of patience to wait, because this kind of chart can take a year, months, days, weeks to form, and you can be holding trades for over weeks, months to even a year. So you you have to be very patient if you want to trade with the position traders. That is, you'll be capturing the largest scales of the market, and it you will have to psych with your mentality to see if this kind of trading aligns with your availability, or your psychology will be messed up if you choose the kind of trading, because you'll be less active in the market when you're a position trader. You only have to be catching at least 5 to 10 trades the whole year to be making a lot of money. No, you don't care about this minor, major intraday trading swings and highs. No, you care about catching the major moves. You have to be very patient if you are going to be a position trader. So that is for the position trading. So that brings us to the end of this episode and lesson. So the style of trading you choose must naturally align with your daily activities and your availability to trade it. Let's say you choose to be a day trader, but you don't have a time like 8 hours to start computer and make informed decision to capture as much moves as you can, then you might consider taking the swing trade. But let's say you have a lot of time, 8 hours per day, to sit at the computer, to making decision and calculations to take the mass trade as we can, then you can go for the day trading. So that is for this episode, and I'll see you in the next video. If this video gave you a lot of information and taught you a lot, consider giving it a like and subscribe to the channel if you're new.